Hey, everybody. Thanks for joining me today to talk about how to pick stocks in 2026. What makes this year a little bit different than past years? So let's dive in. Oh, by the way, I re listened to some of my prior videos and found them quite boring. Sounds like a lecture more than a conversation. So I'll try to be a little more interesting, a little faster, not go into so much detail today. But the question we're trying to answer today is how should we pick individual stocks, given that the market is overvalued? And the answer is be selective and be patient. You may and definitely keep powder dry for an upcoming correction and be ready to jump. So what I'm doing right now is I'm creating a watch list, and it's based on fundamentals, which companies are solid. And so I'm ready to go when I see them hit the price point I'm looking for. How do we know the market's overvalued? You can watch any of my prior videos, but I look at 40 different inputs across 8 categories, produce this market vulnerability index, and it's climbed above 80, and it's been that way for about 6 weeks. And historically, once it climbs above 80, it doesn't stay there for more than 11 months. And so we're predicting a correction of some sort within the next 11 months. So how do we pick stocks? Look at 4 things: quality, growth, valuation, and then the market environment. So is it financially a solid company? Is it growing, and has it shown a record of growth? And is it showing a record of future growth? And then is it the right price? So I went into all sorts of details about how I built this model and crunched data. And it was in a video called Rate Any Stock, and it was published on June 28th. And I went into all sorts of details around the metrics collected. It was probably very boring because it only got one view. So if you are interested in getting into the details of how this works, go check out that video. But what I did is I ran 100 companies through the model. 2 of them didn't really work because they were banks that didn't fit all the metrics I was collecting. 16 didn't even pass the basic screening of, are they making money? I don't even consider companies that aren't making money yet. It's just too speculative. And then so 82 companies were scored, 9 came out strong. Strong is good enough for me to put on my watch list, not good enough for me to buy right now. But here's the top 10. And this data is a few days old. So since this data was published, Booking Holdings actually had a quarterly earnings call, and their numbers got even better. So it overtook Adobe as the top scoring company. But basically all these companies are high quality. They've shown great growth, and then not all of them have great value and are priced right. So those are the 3 things that come into play and give us our overall score. NVIDIA is actually not priced that bad considering their forecast for future growth. MasterCard, Visa are really interesting. So these are all on my watch list. I want to see these valuation scores climb. MasterCard's not bad. Booking and Adobe have good valuations because there's a story. It's interesting how AI is impacting valuations across the board. Basically, the market is saying that Adobe and Booking Holdings are going to get beat up by AI, and that NVIDIA and a whole host of other companies are going to benefit from AI. And so that's why the valuations are getting this high score for those 2 companies. But let's look at Adobe. So the base financials are great. You can see their revenue, 13% year over year. One thing that you look at companies like this is the annual repeating revenue. It has grown. It grew by 500 million and tripled year over year. That's pretty great. And then your total annual repeating revenue is 27.1 billion or 27.1 billion. So that's pretty great too. So I mean, it's a good business model. The problem is the market thinks that generative AI could reduce demand for creative software, and it's going to hurt the company in the long run. That's why it's priced so well. So if you look at Adobe, that's kind of the consensus, is it's been beat up. This was actually a good price point, I think, right around 200. It's recovered some because people have seen the strong financials. But I'm looking to see if it goes down again closer to 200, and if it does, that's going to be an opportunity to buy. The next one, Booking Holdings. These numbers are about a week old. They had their quarterly call on the 4th, and their free cash flow yield got even better. It's about 6%. It's very high quality, strong compounding, solid cash generation, and a valuation that still looks pretty reasonable despite the what's going on with the market. So what happened is it got beat up because people thought, who's going to use a bookings site to book your trips? Because AI could do it for you in the future. So you can see it got pretty beat up, and it's recovered. It's at about 212 right now. I just checked a minute ago. Um, but that's still a pretty good valuation given its revenue. Its PE is right around 21. So it's very interesting because they are generating their free cash flow is looking great. Anyway, what I'm doing is I'm watching this. If it drops below 190, I'm going to jump on it. So if it drops anywhere, that's not even a huge drop, like a 10% drop. That I'm going to jump on that. So those are the two that jumped onto the watch list. There's a lot more very high quality companies that my model found Apple to be included, but its valuations are a little bit high, and maybe that's by design because Apple's always been a great company. But what I'm looking for is strong compounding companies at good prices, and right now that Apple didn't meet that threshold. But here's the bottom line. Market's expensive right now. Selection is more important than ever because we think there's a correction coming. It's good to be patient. It's good to look at fundamentals. This framework that I've identified will continue to identify opportunities. I'll continue to share those with you. So focus on what you control, and that's picking great companies at the right price. So that's what we're going to try to do going forward. Thank you for watching. Next, we'll continue to look at how to make good decisions regarding individual stocks. We'll update this tool every couple of weeks, and we'll also update the market vulnerability index every couple of weeks. Thanks for your time.